Hello traders, welcome to yet another beautiful session with me guys. Uh, I'll be making my weekly analysis. So for this week, I'm basically watching this. I will be watching Euro USD and other pairs. I'll be explaining Euro USD GBP, all the major pairs, all the major currency pairs. So for this one, I will start. As you can see, guys, this is my fundamental analyzer, which is an AI tool designed to analyze the fundamentals of the market, and then it tells me everything I need to know in the fundamental world of the market. Which, guys, we should know that the fundamental is the main driver of our bias. That one every trader must know. A market does not move due to the technicals because it hit a certain support. There is a reason why gold is moving to a bullish side. It's because people are running to gold as a safer haven. The US economy is falling, stuff like that. That's why the market really moves. It's not that what we think the technicals only are the reasons why the banks have to move price at a certain time, but then the bias of the market is always the fundamental one. So we start with the Euro USD. We tap it, and then we wait for the as it's processing, guys. It's evaluating the market sentiment, and then it will give us an intelligence report. It will sum up every fundamental out in the world. As you can see, it has the major pairs: GBP USD, USD JPY, USD CHF, AUD USD, USD CAD, and NZD USD, and then it has even the minor pairs: GBP JPY, that's where you find it, GBP CAD, and then it has the golds and commodities. So as it's analyzing, so the report is finally out, and then it's telling us that 70% confidence the market is bullish. So we can go Morgan forecast Euro USD to reach 1.1 by September 2025, and 1.22 by March 2026. That was JP Morgan's forecast for Euro USD. For you guys who don't know JP Morgan is basically it's basically like how what we call the market movers, the big inside the banks that really are influential in this market. How can I call this? We are in the market business. It's all the same. Driven by expected Fed rate cuts due to labor market weakness. So as you saw, the US labor market saw some weakness, and then for the Fed to maintain the economy of the US, they must cut the rates. So this has led to a downside force to the US dollar, and then gold as well. Why the ECB is likely to keep the rates on hold in. So the ECB is the European Central Bank, the one that drives the Euro USD. The US dollar has lost safe haven status amid concerns over US debt sustainability and trade policy uncertainty, creating a favorable fundamental divergence for the euro despite near-term geopolitical headwinds. So you can see the key drivers of the market, and then the risks to our bias are coming from the escalating Middle Eastern crisis and Iran, which gives us dollar demand as a safe haven. So what are we supposed to watch? We are supposed to watch Thursday PMI prints as a leading indicator could reveal trade war fallout impact on both economies. So PMI is a major thing we're supposed to look out for, but it's on Thursday, so we have some time to trade. Fed speakers commentary after Scott's tariff decision, weaker quarter for the GDP, and hotter PCE data with only 51% chance of June. So that's a good one. If that one comes in, we are good. And then market pricing to ECB, European Central Bank rate hikes fully this year with possible third amid inflation concerns. So that's the fundamental analysis for Euro USD. Now we move to the charts, guys. So this is our Euro USD chart. This is the weekly chart, and on the weekly chart we can see it's basically they. This is a bay. Let me see. We had the relative break of structure, so the market broke out from the higher high, from the previous higher high. So that was bullish, bearish momentum. Yeah. We go to the daily. The daily is also saying, as you can see, it's saying bearish. And then we go to the 4 hour. 4 hour is also 4 hour. So to do that, we can see. Sorry about that. You can see lower, market comes back higher, lower, higher, and then it goes lower and comes back higher, then goes lower, low, higher, high. So the market is basically bearish. To get a bullish 4 hour momentum, the market should come to this level. So that would be a good bullish market for bullish moves. But then that's on a 4 hour. But it's making some new higher highs, higher lows. Even here it made a new higher high. Yeah, a relative break of structure. So it's a bullish, bearish. It's a neutral momentum. Let's move to the 1 hour. So guys, this is 1 hour, and on the 1 hour we see bullish momentum. Yeah, guys, we see basically bullish. The market is all bullish in the 1 hour. So I will remove this. I will remove this and then this, and I will bring in the market trader. So the market trader is saying that the 8 hour is bullish, the 4 hour is bullish, the 2 hour is bullish, the 1 hour is bullish, 30 minutes bullish, everything is bullish. It's showing us the buy percentage is 37.5, and then the sell is 62.5. The daily is still bearish, as we saw, guys. The daily is still bearish, so we might see. So now that's done. Now we need our demand zones, where the market can come back before really going high. So we pull back our market reader, and we see first way, guys. We see some support down here. So I'll first edit that. We see here we have support, some support. Okay, so we have a support zone. Our market hit into the support zone and then went back up, but then it was a Monday, so the market didn't do anything. So now we wait, guys. I'm not seeing any good entry from here. So what I would basically be looking for is something like this. The market induces out of Asia, and then boom, this would be my my entry, guys. My entry. This is how I get my entry. So I will wait for New York session for the real good moves. Yeah.